Almost every personal finance influencer is telling you to invest right now, and their advice would be simple: dollar cost average. Invest a small amount of money, whatever you can afford to lose, every month, and over time that money will grow. Well, in this video, I'm going to give you 2 reasons why they're wrong. So let's get into it. Hi, my name is Millen. I'm an economist, and I've been studying the markets for the last 15 years. Number one, they're wrong because this time is different and I can prove it. So, right now, a lot of economists are stressing that what is happening now is an AI bubble, and it is very similar to the dot-com bubble. But here's where I can tell you that they're different. And in fact, it's not actually a bad thing. So why am I telling you not to invest? Well, we have to understand what is happening and look at the bigger picture. So right now, the AI bubble isn't a full-blown bubble like the dot-com bubble. So what happened back then? Well, with the dot-com bubble, if I started a random website, literally any random website, if I called it myface.com and I registered the company and I listed it on the stock market, it would have attracted millions of pounds of investment. I wouldn't have had to do anything, maybe build a very basic website. I wouldn't have had to create a business plan. I wouldn't have had to do anything. And it would have attracted millions of pounds of investment. But right now, that isn't happening. These companies like Meta, like Amazon, Google, Microsoft, are all making money, and they're all very good at making money. They're all very profitable. So it's not the same type of bubble. The fear of there being a bubble isn't even fully just AI either. So let me explain that. Right now, what you and I tend to see as AI are large language models or generative AI. So you go on ChatGPT or Gemini or wherever, you ask a question and it will respond. Or you ask it to create a video or a photo, whatever it may be, and it will create one. There's also another part to AI that you and I see less often. Now, these are really deep learning models, and it's used in healthcare and in other areas of life. For example, if I were to train a model with 100,000 images of MRI scans, and some of those scans had cancer in them and some didn't, well, I could train the model, and then when I showed that model a new scan, it would be very good at detecting whether or not there is cancer in that scan. And that is exactly what is happening. So that is a different type of use case. And there are many different use cases like that, which are actually deep learning. Now, that isn't in a bubble, because those clearly have very real world use cases and very valuable use cases where they can save time, create more efficiencies, and even be more accurate than us. But the part that is potentially in a bubble is what I first discussed, which is asking these chatbots, which they are, questions and receiving answers, or generating images and video. Now, yes, while there are some use cases with it, like Coca-Cola using one of these models to create their entire advert, for the most part, what you're going to receive is AI slop, because it doesn't actually understand the words that you're asking or the words that it is giving back to you. And that is where the potential or the danger of a bubble is. Now, the reason why I'm saying this isn't necessarily a bad thing is because, that's not clearly all of AI. There is clearly a lot of AI or deep learning that is going to be very valuable. However, the fear is that these companies are borrowing billions of pounds, more than they're earning, in fact, in some cases, in order to fund AI data centers, which could then just be used to generate this AI slop. And that is where a bubble might potentially be forming. However, that is not the real reason I've made this video and to warn against investing right now. The reason why I've made the video brings me on to point number two. Number two, this time is different. Now let me explain why. So during the dot-com bubble, many companies formed that did not even have a business plan, that generated millions or attracted millions in investment, and that caused the bubble to crash. However, the technology, the World Wide Web, actually created new industries. Think about it this way. If you lived in the UK or the US or in Europe, wherever it may be, and you wanted to buy bamboo directly from China, maybe you were looking for a supplier for your shop. Well, the only way you'd be able to do that was to literally take a flight to go to China to find where these suppliers would be, and then to actually make your deals in person. Now, there are websites like Alibaba. You can literally browse on them for 5 minutes to find a dozen different suppliers. You can start messaging them right away and come to a deal. So you can create deals from the comfort of your own home without ever having to leave. And then you wait a few weeks, maybe a couple of months, and those will be shipped to your door or to anywhere else in the world that you want them to be shipped to. So entire industries have been created. We're talking about web developers. We're talking about computer engineers. We're talking about data and analytics experts. We're talking about online marketing, social media marketing, email marketing, and the list goes on and on and on. We're even talking about people in real situations like physical hard labor. We're talking about shipping, logistics, companies that build containers because it's created an entire booming worldwide global economy. So this technology, the World Wide Web, created millions of jobs, and it allowed new industries to absolutely thrive. Now, that is different to what is happening right now, and many of you are already feeling it. For example, what we have right now are large language models and deep learning models that are taking away jobs. For example, we've got deep learning models that are being used in the field of medicine. You or me, we could take 100,000 MRI scans and feed it to a deep learning model. We can tell that model which of those scans have bone breakages, which do not. We can then scan a new person. We can take that person's scan and feed it into the model, and that model will be very good at detecting whether or not there is a bone breakage in that scan. And generally speaking, they're more accurate than humans and faster as well. So you can imagine how this is taking away work from multiple analysts being able to do their job. The same thing is happening in all other aspects of life. For example, it's happening in logistics. Amazon are trying to replace all of their staff who work in their warehouses with robots. They even want to replace the delivery drivers with robots. Then you've got companies like Coca-Cola who are using generative AI to create their Christmas adverts. So you can imagine how this is taken away from the work of visual effects designers and developers. And this is a very real problem. What we're also seeing is that new graduates have a skyrocketing unemployment rate. That is a very real problem that we're all feeling. What we're also seeing is these large language models and these AI tools are taking jobs of managers, of developers, of customer service assistants, of so many people, and those jobs aren't being replaced. And this is the key. During the development of the World Wide Web, after that, industries boomed. Instead, what we're seeing is a tool or a set of tools have been created with the sole purpose of removing jobs. That means companies are replacing a team of 10 workers and only keeping 5 of them. Those jobs are not being replaced. So now we're increasing unemployment, but we're not replacing the jobs that have been lost. And we're seeing it among the younger generation, those who have just come out or graduated from university. We're seeing it in office workers. We're seeing it. The NHS just yesterday announced thousands of layoffs, and this is all due to artificial intelligence. This is a very real problem because we are in an era of technology that is replacing labor and replacing workers. And as of now, we don't have any idea if new industries will come out of this and be able to thrive. Because right now we're losing jobs, but those jobs are not being replaced. And in my opinion, when you look at it like that, then you have to wonder, why are we still listening to financial influencers who are telling us to invest a small amount of money every single month into companies that are so highly valued, when we know unemployment is rising across the globe? We know consumer spending is going down across the globe. We know that GDP growth is slowing down across the entire world, in the US, in Europe, in Germany, in the UK. And even in China, we're seeing now a slowdown of investment. So this is a global problem. We are literally walking into a complete global meltdown. And so investing right now, or being told to invest, in my opinion, is very poor advice, because at any point, one of us or all of us could end up losing our jobs, which means cash is going to be king. And so putting your money away that might end up losing half of its value over the next year is, in my opinion, a very, very risky move to make, because investments are not guaranteed to go up, but you are guaranteed to lose money at any certain point when you invest. And that is the point of the video. So please, if you have taken something away from this, leave a thumbs up, and I will see you on the next one.